Is Ethereum about to finally blow past its old all-time high? The new spot ETFs have everyone talking, with analysts like Crypto Jebb seeing a confirmed breakout that could send ETH soaring towards $9,000. It seems the game has completely changed, with real institutional money now flowing in, a far cry from the NFT-fueled hype of 2021. But not everyone is convinced it's a straight shot up. Cowen is calling for a market-wide pullback in September, sticking to historical patterns that have played out for years. This sets up a massive clash. Will the flood of new ETF money break the old cycles, or is a September dip inevitable? While all eyes are on Ethereum, projects like Cowen token are quietly building, trying to bring real DeFi power to Bitcoin with backing from giants like Binance Labs. The big question is, where should you place your bets? In the latest video from Altcoin Daily, the discussion centers on Ethereum, which is getting very close to its old all-time high of about $4,800. The host argues that today's situation is much stronger than back in 2021. Back then, the price surge was mostly because of the NFT craze and DeFi speculation. Now, it's a different story. The current momentum is backed by serious fundamental changes and big money interest. The video makes a compelling bullish case for Ethereum, and it's hard to argue with the core points. The launch of spot ETFs is a structural shift that opens the door for a new class of investors, and the shrinking supply on exchanges is a classic recipe for a price increase. However, the excitement might be a bit premature on a few fronts. The video's mention of $1 billion in daily net inflows for ETFs was likely a peak event. Recent data shows these flows are often much more modest and can even see outflows. This suggests institutional adoption may be more of a slow burn than a sudden flood. Furthermore, the regulatory environment, while improving, isn't a sealed deal. The Clarity Act, likely referring to the FIT21 bill, passed the House but faces significant opposition in the Senate, so that tailwind could easily become a headwind. Interestingly, the video didn't mention the recent Dinkin upgrade, which dramatically lowered transaction fees for Ethereum's Layer 2 solutions. To me, that's one of the most powerful recent developments, as it directly improves the network's usability and scalability, which is what will create lasting demand. In the latest video from the Crypto Tips channel, the host questions the wild prediction of Ethereum hitting $80,000, a number mentioned in a tweet by Berovich. He suggests that if ETH ever reached that price, we'd be facing massive hyperinflation, a situation where you probably want to own Bitcoin instead. The video connects this crypto speculation to a grim economic reality, pointing out that AI and robots are set to take jobs, with one robot potentially doing the work of two humans for a fraction of the cost. He also notes alarming signs like 1 in 7 Americans using buy now, pay later services for groceries, and the U.S. stock market being in a bubble not seen since the Great Depression. The host's take on market sentiment being driven by price rather than fundamentals is spot on. It's a classic feature of crypto cycles. What's interesting is that since this video was likely recorded, the narrative around Ethereum has shifted significantly with the surprising approval of spot Ether ETFs in the US. This regulatory green light adds a ton of weight to the institutional buying argument the host was skeptical about. While $80,000 still sounds like a fantasy, the ETF approval provides a real, tangible reason for a potential surge in demand from big money. The shaky economic backdrop the video describes could actually push more institutional funds toward assets like Bitcoin and now Ethereum as a hedge, making the future for ETH look a lot more interesting than just a few weeks ago. In the latest video from the Cowen channel, he lays out his theory for Ethereum's path over the next few months. He believes ETH is currently showing a lot of strength and is on track to test, or even break, its previous all-time highs within the next 2 weeks. He calls this period Ethereum season, noting that most other altcoins are not sharing in this momentum. However, Cowen predicts this run will be short-lived. He expects a market-wide pullback in September, based on Bitcoin's historical performance in post-halving years. He points out that in 2013, 2017, and 2021, Bitcoin saw green months in July and August, followed by a red month in September. He thinks this pattern will repeat, causing ETH to pull back after hitting resistance at its old highs. After this September dip, he foresees one final push up to a market cycle top before a larger bear market takes hold in 2026. Cowen's analysis leans heavily on historical cycles, which is a valid and respected approach in the crypto space. His prediction of a September pullback based on Bitcoin's past performance is a compelling argument. However, the market is facing a new variable that wasn't present in previous cycles: the imminent launch of spot Ethereum ETFs. This could introduce a massive wave of institutional demand that might disrupt traditional cyclical patterns. It sets up an interesting dynamic where historical chart behavior is pitted against a powerful new fundamental catalyst. Whether the institutional inflows will be strong enough to overpower the September curse, or if the pullback will happen anyway, is the big question hanging over the market. In the latest video from Crypto Wendy, she talks about a new project called Cowen token that's trying to make Bitcoin more useful in the world of DeFi. She explains that while Bitcoin and meme coins are getting all the attention, Cowen is different because it adds real function. It's an EVM blockchain that lets you use your tokenized Bitcoin, like WBitcoin, to earn rewards through simple strategies. She points out that the project isn't just talk, it has some serious support from big names like Binance Labs, Polychain Capital, and OKX Ventures. Apparently, they've already raised $16.5 million from over 10,000 participants in their ICO. The token is now listed on exchanges like Gate, Bybit, and the decentralized exchange OKU. The team is currently running a corn season campaign to get the token on more platforms and make it easier for people to access. She wraps up by saying that corn has the fun vibe of a meme coin, but is built on solid partnerships and a real blend of centralized and decentralized finance. The video gives a solid rundown of Corn's goals and its impressive list of backers. It's true that the trend of building new layers and applications on top of Bitcoin is heating up. My take is that while the meme coin vibe combined with real utility is a smart marketing angle, Cowen is entering a very competitive field. There are already several projects working to unlock Bitcoin's DeFi potential. The project's success will likely depend on how well its one-click yield strategies actually work and whether it can build a strong, loyal community beyond the initial hype. Having support from giants like Binance Labs definitely gives it a head start and a dose of credibility that most new tokens can only dream of. In the latest video from the Crypto Jebb channel, the host explains why Ethereum just had a major breakout that looks confirmed and is likely to start a rally toward a new all-time high. He argues that ETH has been lagging behind Bitcoin, building up energy for a big move. The breakout happened when ETH pushed past a strong resistance zone between $4,000 and $4,100, a level it had failed to beat multiple times. This move is supported by a few key signals: the highest weekly candle close since 2021, a perfect bounce off the Fibonacci golden pocket around $3,400, and a massive surge in trading volume. The excitement in this video is definitely tapping into the current market narrative. The approval and launch of spot Ethereum ETFs in the US was a monumental step for the asset's legitimacy, and the video is right to focus on the inflow data. My view is that while these inflows are strong, they haven't yet matched the initial explosive demand seen with the Bitcoin ETFs. The real story will unfold over the next few months as we see whether this momentum builds or plateaus. The idea of an alt season led by Ethereum is a classic crypto cycle theory. It seems very plausible that ETH could outperform Bitcoin in the short term, especially since it's still below its 2021 all-time high. However, the crypto space is more developed now, with strong competitors also vying for attention, which might make this alt season feel different than previous ones. The technicals laid out are compelling, but achieving those $9,000 to $11,000 targets will likely depend on sustained ETF demand and a supportive macroeconomic environment.